Hey guys, welcome back to my three-part series called Do You Believe in Monsters? Now remember, in video number 1, I introduced you to the first monster that actually set you up for monster number 2. And monster number 1 was taxes. Remember, you have taxes taken out of your check before you ever spend a dime to take care of your family, and it causes you to have a cash flow shortfall. And because it's been going on for so long, it's almost like you don't even notice it and you're used to it, and the monster is staring you in the face every single time you get paid, but you never do anything about it. Now, I want to introduce you in this video to monster number 2. Taxes actually set you up for this monster called debt. Now, I read a statistic that said most Americans have credit card debt, and the average credit card balance is over $10,000. So let's talk about a $5,000 balance, and let's see how this monster is devouring your finances. So first and foremost, you have a balance owed here of $5,000. The minimum payment on that is going to be roughly about $100 per month. So the interest rate, we're going to go with what the average interest rate is out here in the world of credit cards, about 21%. So basically what you would do is you want to figure out what your monthly interest rate is. So we would take the 21% and divide it by 12, and we would come up with 1.75. So that is the interest rate that the bank is charging you every single month on your credit card balance, okay? Now, what we have to do is figure out how much of the $100 is actually going to go towards principal. So what we would do is we will multiply 0.0175, which is that percentage rate there, and we will multiply that times the $5,000 balance here, and we come up with $87.50. Now, $87.50 doesn't sound like much, but think about it. It's most of the minimum payment. So out of the $100, $87.50 pays for you to have the right to owe somebody money. It doesn't even pay down the balance. Many people that I've talked to did not even know that your interest is paid before the balance is paid or any principal is paid. So that is crazy. This is how capitalism works. We have to understand the rules of capitalism in order to operate and maintain at a better and higher level in the system. So now look what happens. So what's left is the balance of $12.50 to pay down the $5,000 balance. Well, you're going to have a long road to go to pay off $5,000 at $12.50 a pop. So now look at this. Here's the reality. $5,000 divided by $12.50, we come up with 400 payments. 400 payments. Imagine that. Now you had a $5,000 balance that took you 400 payments to pay off. So the time to pay that off, ladies and gentlemen, is 33 years. Now wait a minute. This blew my mind when I looked at it. Think about it. $5,000. See, people think that, okay, I got a little balance here, I'm going to pay it down and I'm going to add a little bit to it. Holiday season's coming. A lot of stuff goes on. So they think a $5,000 balance is not a lot at all. But look what happened to you. The bank, you gave the bank $100 a month times 400 months. That's $40,000 that you paid to pay off the $5,000 balance. So you gave the bank $35,000 extra dollars in addition to the $5,000 that you owed. See, that is a scenario that's designed to take your wealth. You must get from up under the credit card debt. But see, remember, you had a cash flow shortfall. Why? Because taxes was taken out of your check and you thought that there was nothing you can do about it. Now, remember, I said Congress has already enacted laws to help you lower your taxes. You just don't know how they work. Lo and behold, we have a system here at MyEcon that'll help you cut those taxes 30, 40, 50%. Now you got money to maybe get this monster off your back. So if you want to hear a little bit more about how to take your life to another level and achieve personal financial success, click the link below. Then go on to video number 3 of this 3-part series, because the last monster, you must also get a handle of him as well. So remember, monster number 1 was taxes. Monster number 2 is debt. And imagine, just look at your life. Imagine what your life would be without the debt. Imagine being able to take that $35,000 extra over the life of your retirement or your working years and what you would have in retirement. You might be able to put, that might turn into $75,000 to $100,000 on your retirement. See, the credit card balance of $5,000 is not just costing you $5,000. It's costing you everything that the interest that you're paying could have become in your retirement account. So you must change that. So remember, guys, today is a great day to build a business. This is John Petterfidel, Platinum Executive Vice President. I'll see you on video number 3.